Trump's decision to tax US imports from Canada will create downward pressure on the Canadian housing market. How will the Bank of Canada respond, and will they continue to lower the key interest rate, given that the US is now also impacting our job market? Buying property in Toronto is still not something that many potential buyers are interested in. They're mostly waiting for mortgage rates to come down, and now a high level of uncertainty is creating doubt in the real estate market again, just as we started to gain momentum. And despite the trade wars between the US and Canada, the Bank of Canada decided to maintain their course of action with another drop in the key interest rate by 0.25% today on March 12th. This was meant to be a response to inflation coming down, but now Trump is creating an impact on the Canadian housing market, and property sales in Toronto just became a lot more complicated. The US's 25% tariff will play a major role in the overall sentiment with Toronto's housing market. The 25% tariff from the US will play a major role in the overall sentiment with Toronto's housing market. It's creating more uncertainty. Are home prices going to crash? Are interest rates going to drop even faster now? It's too early to see any real impact in the real estate market this soon from the trade war. In fact, we likely won't see any impacts over the next 3 to 6 months. Any major impacts from any major economic event like this takes time to impact the real estate market, and also depends on how the government reacts to outside pressure. Think back to all the rate cuts the Bank of Canada made ever since June last year. Each one after another made minimal impacts to the market, and the overall impact still hasn't been realized. US tariffs threaten our real estate market in 3 major ways: construction, interest rates, and market confidence. So first, let's look at construction. New home construction depends on materials like steel. With a 25 to 50% tariff on steel imports into the US from Canada, the question becomes who's going to absorb the increased costs that steel manufacturers are taking on. They're likely going to pass them down to buyers, so you can expect new home construction costs to go up. So then what happens? Builders could delay their construction plans, new housing projects are placed on hold, while developers wait for construction costs to stabilize. Some developers even abandon projects completely, and this is happening in a time when pre-construction home sales have already been struggling. Between 2022 and mid-2024, more than 24,000 homes across several projects were put on hold. Sales were low, and developers knew that they couldn't hit sales targets. This meant that the money needed to start construction was missing. This is even leading to developers to sell the projects to the highest bidders. The way homeowners approach their home renovation projects is also going to change. Common projects like updating bathrooms and kitchens, finishing basements, or gutting an entire home, all of these projects are going to be looking at increased cost in materials. So this could slow down the resale market with less people listing their homes that needed work before selling. Housing supply goes down in a time when a number of buyers is also low. And here's where the problem is. We need new homes to support our low inventory real estate market. If new construction slows down, buyers shift to the resale market. More eyes on the resale market could drive those home prices up, and more buyers will be targeting the housing market if mortgage rates continue to go down. There are still 2 rate drops we could see before summer on April 16th and on June 4th. We could see a busier fall real estate market only if the government can manage the impact of the trade war while controlling inflation through strategic rate drops. If US tariffs slow down in Canadian real estate, the Bank of Canada might have another reason to drop the key interest rate to stimulate growth. So there's a silver lining here. The trade war is going to put pressure on Canadian consumers, but Canadians will also benefit from lower mortgage rates. A recovery in Toronto's real estate market this year is still possible if the key interest rate drops lower than what was previously forecasted by the Bank of Canada. Imagine if the rate came back down to what it was in 2021. These lower borrowing costs would bring out any pent-up demand from buyers that have sat on the sidelines for the last 2 to 3 years, and finally create momentum in the real estate market that's been edging to happen. The Bank of Canada already made several rate cuts over the last 9 months, but now the tariffs impact on interest rates and mortgage rates is another concern to consider. They'll create economic pressure and could result in these 2 different real estate markets. If we start seeing the economy slow down even more than what we're already seeing today, then the tariffs would reduce export activity to the US. We're already seeing job losses as a result, and this is only the beginning. So the Bank of Canada could react with further rate cuts of more than just 25 basis points to expedite the drop in the policy rate below 2%. This would bring down variable mortgage rates rates and stimulate the market again by reducing borrowing costs for home buyers. This ultimately ends up boosting demand of residential real estate. Over time, home prices also go up. The cost of these tariffs could also lead to higher inflation above the bank's target of 2%. So to circumvent rising costs and rising inflation, the Bank of Canada can hold the policy rate steady or potentially raise it slightly. We could also see fixed mortgage rates go up since they're linked to bond yields. If fixed mortgage rates go up, then anyone trying to renew or even get a new mortgage would see higher borrowing costs. Just like we've seen in the last 2 years, higher rates lead to increased monthly payments. This is a major turnoff for a lot of potential buyers, so we'd potentially see a reduction in residential sales. And there's also the group of home buyers from 2020 and 2021 that are looking to renew this year. Over the last 9 months, mortgage rates have been coming down, but the borrowers from 2020 and 2021 who got mortgage rates in the 2% range are still going to see renewal rates of almost double what they currently have. Consumer confidence in the real estate market goes down with the high level of uncertainty. Doug Ford recently mentioned that these trade wars could devastate our economy and put up to 500,000 jobs at risk from every sector in every region. With jobs being cut in Canada, the natural thing we'd see is a lower number of potential home buyers. Affordability of Canadian housing becomes a factor with higher unemployment. Lower interest rates have been providing some relief, but the potential for rising inflation is going to put downward pressure on all of us. This would lead to property values seeing almost no growth this year. The average home price is projected to go up by only 1.4% this year. This would mean that we're going to see a balanced market with demand and supply being relatively equal. The lack of property appreciation this year is almost guaranteed in the condo market. Real estate sales in the GTA fell by 27% compared to last year, while the number of new listings went up by more than 5%. So sales are down and supply is up, which is the recipe for falling home prices. Something to watch out for, which I'll keep you updated on. And at the end of the day, your goals and how you go about them are going to be different from the next person. So here's a guideline on how you can approach the current market. If you're a home buyer, consider the potential for falling interest rates at an aggressive rate, with US tariffs impacting our real estate market. This could lead to rising home prices as more buyers get into the market. Monitor mortgage rates and think about when the best time is for you to get a mortgage pre-approval. And if you need help with any of this, you can watch another video that I posted that teaches you every single step you need to follow before you buy your first home. If you're a home seller in the resale market, then your patience might pay off soon, but not just yet. Overpriced and unattractive new construction projects are making the resale market more desirable in the eyes of potential buyers who have been gaining more confidence in the market. If you can keep waiting and you're not in a rush to sell, just wait. Trump's 25% tariff on Canadian goods is creating a lot of uncertainty in Toronto's real estate market. That uncertainty leads to a lower level of activity, which is actually an opportunity depending on the lens you're looking through. And by the way, my name is Fred Tam. I'm a real estate broker in Toronto. If you're looking to stay updated, make sure you subscribe to my channel and follow me for market updates and the best real estate tips. New videos are coming out all the time to help you reach your real estate goals. Thanks for watching to the very end, and if you made it this far, leave a comment telling me what you think is going to happen this year in the real estate market, and you'll be automatically entered into a contest I'm running until the end of April. I'm sending one lucky winner a $50 gift card of their choice. Thanks for watching, good luck, and I'll see you in the next video.